Hi, and welcome to the Market Alert for Friday, the 18th of June 2021. So what's behind today's crazy market move, obviously referring to yesterday? Well, stun traders should be looking at what will happen tomorrow. And what it means by this is today is the quadruple witching of the stock indices, the options on stock indices, the individual shares on the futures and also on the options, so i.e. Microsoft futures contract and also Microsoft options, to name just one of them. So it's quadruple witching, and the market is quite volatile when this happens each quarter, and they're going to use this to their advantage today, and I'll explain as we go through the market alert. And yesterday's news, we are still talking about a rate hike in over 2 years and 2 trillion more in QE. So what do we mean by this? I mean, I'm still stunned by the fact that the dollar can still rise on the premise that that tosser Powell could make a statement on the basis that he was going to increase interest rates twice by the end of 2023. I still find it absolutely incomprehensible that he could make such a statement and cause the carnage in the markets that he's done, intentionally, I might add as well, in order to slam the metals when he knows full well that the inflation that they're creating isn't transitory. Anyway, enough of a rant there before I get into more extravagant language. So what it means is this, that substantial further progress. What does it mean? We don't know. What it does is that 120 billion, that's what they're printing every month at the moment in QE, times 18 months is 2.2 trillion. And where will it go? As I said yesterday, stocks, housing and commodities. Nothing changes. It's the Fed put. It's underpinning the manipulation that we've seen for the last 13 years or more. Yesterday's jobless claims unexpectedly jumped. Some potential good news, and this helped the market initially as far as the Dow is concerned. The total number of Americans on the dole dropped below 15 million for the first time since April 2020, which was the second month into the pandemic. Volatility increased yesterday as well from 12.81 to 13.72, so breaking out there to the upside. The Dow, I think, is actually below the 20-bar moving average, as is the implied volatility above. So we are sort of in a corrective phase there. News today, what have we got? It's Friday, isn't it? Let's just see. We've just got retail sales for the UK. These are forecast at 1.5, previous 9.2, so the actual is going to be pretty low, I would have thought. Let's start off with the Dow and have a look, see what's going on here. You can see that the fib retracements that we drew in from this low to the recent high prices traded all the way right down to the 89% during yesterday's session, and then bounced off, and we got a bit of a bounce going on overnight, but I'm not convinced in any way, shape or form that the downside is over. Retest of the 89% is probably likely due to the quadruple witching at 1:30 to 2:30 today. Or actually, it might be 2:30 to 3:30. It actually takes place when the cash market opens, I think. They changed the times on these. It used to be sort of an hour before in the futures market, but I think it's 2:30 now for the US markets. So yesterday, you can see that it all started off quite well with the news, the pajama traders moving the market up to the DP. And once we hit this, then it was just straight down until we got to the S2, with bounces in between at the S1, and also obviously each individual BRN, which you can see there, which is so important to have these lines on the chart because they give you a great roadmap of where the market is likely to trade to, and if it doesn't hold at that particular level like here, it will then break down to the next one and then keep going down, and then you've got the double here where you've got the pivot S2 and the BRN, and of course what's even more important here, you've got the 89 in the daily chart, and that's why I always start with the daily chart and make notes of where those important fib lines are to actually use in the intraday trading. So overnight, the Dow just sitting around the DP at the moment, below the DP, the close, yesterday's close, and the 200 MA. So a bit of downside pressure here at the moment for the Dow, and I'm not surprised given that what Powell has said is just to take the the edge off all the markets, cool them down a bit. That's what he's doing. So the DAX still very strong, all things considered, for yesterday, and the market trading only down to 62%, still above the 20-bar moving average as well. And at the 5-bar moving average at the moment, the market retracing yesterday from this high to this low. Just draw these in, and you'll see retracing up to 78% there before the market hit some sort of resistance. So just at 78, didn't quite get back to 89. It's an interesting pattern here as well, because this is how the tops of markets generally end, and then they move lower. I'm not saying it's going to, but that's how they generally end. And if we get another big sell-off with the quadruple witching in the Dow, then it's going to put a lot of pressure on the DAX. I'll keep these fibs in place, but until the market gets to this area, what you could do is this. Let me just expand this a bit and also extend this way as well. And because we've got no fibs down to the 62, it's difficult to draw them in because there's no other high. Then you can just take the fib retracement tool and click twice at the bottom of this bar, and it will actually put them in for you. And there you can see, so if we have a down day now, you can see where you're likely to get support each time the market moves. And again, just make a note of those and transpose them onto the intraday chart and time frame that you're actually trading. So that's what I would be looking at. Notice the 62 is also yesterday's low, so that's easy to remember. So take note of that as well. If I just go to a 30-minute chart, you'll see there it is there. That's yesterday's low, which is only, as we look at this, 50, 100, about 100 points lower from where we are, but currently trading above the DP for the DAX, unlike the Dow, which is trading below. So let's have a look at the inside the action yesterday. The market kicking off, moving to the upside after an 89% retracement at the S1. Prices moving up sharply. They then retrace about 78% and then work their way back through the DP all the way back down to the previous day's low. And again, notice how the market finds these areas of support. You'll see climatic volume in these areas as well. And then the market getting into a bit of a sideways move, having retraced from there back to there about 78% before prices then just trade sideways, waiting for the jobless claims, which came out at 1:30. And then in the afternoon, as the Dow made all of this move, this is quite incredible actually. Let me just go back to the Dow and go to the 5-minute chart. You can see there how much activity there was. I mean, from here, 100, 200, 300, 400, 450 point move, and the DAX barely moved. Let's have just have a quick ballpark of what the range was. A total of 41 points, just 10% of what the Dow would actually move. So really strong as far as the Dow is concerned. Overnight prices, as we've just seen in the 30-minute chart, just sitting at that DP just below the 200 MA in the 2-minute chart though. So again, it's down to what the futures traders will do when they come on stream in the next 20 minutes or so. Now over to the metals. I spent most of the day trading this, and I'll probably switch from this to here and just show you what I was doing. Now I had a position on, and as I said, you know, if it doesn't look good, I'll get rid of it, and I did. I got rid of the position that I had, took a small loss of pence, and sort of sit and watch the markets, how it played out. Now the reason for this is quite simple. 20 years or more of watching the silver market, they are absolute swines. There's no other way to put it. If they get the chance to slam the price, they will slam it. It doesn't matter how long it takes to move the market up. They will come in and they will slam it. As I've shown you before in the market, it will take every opportunity to try and drop it $5 just to shake out the wheat longs. and also offset some of the losses that they have in their short positions. So I'm going to go through this quickly because there's hours of this, but I'd noticed that the dollar was starting to move to the upside, and that 62 was in the frame. It had gone through the 200 MA, and we're looking at a similar situation, which I'll come to in just a minute. So there's the 30-minute dollar, and they're going to move the dollar up based on this crap about 2 rate increases over the next 2.5 years. So I'm just going to bring you the pertinent points. So what I was doing here was, one thing that I've noticed with silver is that the psychological levels ending in 50 and 100 or 00, great areas. This is what they'll do. They'll move the market to these levels and then try and hold for a bit. And so what I've been doing is actually placing orders at these areas just below the psychological levels, because what will happen is the order will be filled and then you'll get the bounce because they try and bring it back. Then I can just look at the price action. If it's not going to go, I can actually offload it, take either a tiny profit or a small loss, and then go down to the next one, because that's what they'll do, and that's precisely what they did yesterday. They kept bringing the market down, as you'll see. We've got the orange line there is the order, which is below the psychological level. I thought, because what they'll do as well, like here, they'll run it down and then bring it back. So you haven't got to be right under the psychological level. You can actually go quite a distance below. I usually go about 5 to 10 cents initially, and then just take a view, see what it's doing. And you'll see the market moving lower. We got close to the jobless claims. Again, you can see the climatic volume there as well, holding the market. We got the jobless claims out, and I've drawn in some fibs here from up and then back. Sorry, it's the other way around, from there to there, projected back. And the market was waiting for the news. I actually cancelled the order at this point. I thought I'd wait until the market decided what it was going to do, and this is before the news, so I've cancelled the order. It's not showing up on there, but sure, I can tell you now. There you go. I actually moved it down on the MT4 platform and then put it in below here, below 26. I could see immediately they were going to use this to their advantage. The news wasn't even out. We've broken the low, and they're going to create a shakeout, because that's what they do. They're absolute swines. So you can see them trying to hold the market there. They bring it back. I'm moving between the 5-minute, the 15-minute chart, and also the 60-minute and the 30-minute, and I'm just taking a view on each time frame. So that's why you'll see different size bars. So now we're waiting for the news. But they retrace the market off this. Again, you've got this other cluster of volume. We had this one here when they were holding it at the low. That broke to the downside. You can see the selling, and then it's a case of waiting to see what they do. We can come back to 89% in the low, and then I'm just checking the figures. There they go, and then they try and bring the market back, and I'm not convinced. And I'll tell you why I wasn't convinced, because it's in the mid-range between this BRN and this one here, so the two psychological levels there. And I can see the selling coming back in here, and I'm just using the fibs to mark up and mark down. And I have 2 sets here on the upside, and there's on the downside. So the market had got into a bit of a channel, and it wasn't long before they then decided to break it to the downside, which you'll see. We come down and test the low, and once again we'll see the volume increase at this level as they try to hold it, and then it doesn't, and then they'll slam the price down, because that's what these traders do. They think, okay, we've got people in the trade now, and what we'll do, let's take it down to the next psychological level. So I'm going to fast forward again. If I just bring this back a bit, depending on which time frame, there you go, up, measured back 89, we got to it, and then we went through, and as soon as we go through that, we know again, just by the volume, we're going to see the downside tested, and that's what happened. I had the order on the market there. The market came down below 26, it's filled, and then again you'll see now how they bring the market back at that psychological level. Now what's happening here is they've bought back into the market. You can see them testing here as well, and they're bringing it back. And I put the fibs on from this high to this low, and I can see the market's already struggling. Now this little S here tells me that there is supply coming into the market or selling, and it's automatically indicated. This is the new things that I've added into the software. This little diamond here is telling me that the stochastics are oversold on the downside as well, which I just have as a background just to give an indication of whether the market's overbought or oversold. It is not something major that I use, but it's just interesting to see. And it adds to the trade when I'm actually in it to say, well, the market's oversold on the downside, so we could get a bounce. And if I'm buying below the BRN, I can actually get out at break even. Or move the stop to break even. So we did start to see the market trade up to the 62, and again we've got an increase in volume at 50% of this move here, from there down to there, and again it's an increase in volume, so it's not looking good. This looks like we're going to retest this. So I had to go out. So what I did, you just see it there. It's unfortunately it's just off screen, and I put a stop in. I should have actually moved the screen over. Put a stop in at break even, because if this is the other thing with the silver market and metals markets as well. If the downside move is over, you will see it move back very, very quickly. They'll ramp it back up, and this wasn't happening. So that was of a concern there. So anyway, I was out for a while. As you can see, the market, I'm not changing the fibs because I'm not here. The market came back and took me out, and then they're trying to hold the market. So at the moment, I think a bit later on in the evening, again, it's not shown on screen, so let me do this for you manually. I have an order in on silver. Let me just bring this down to a 15-minute. I'm down at the next psychological level, which you can see there, because I think today they may actually ramp the market down to there, and if not, I'll take a view and get back in. So let's move back to where we currently are. So this is the silver market. They also brought the market down to this low as well, or just above it, and the 200 MA. So that was something else that I drew in later on in the afternoon. So at the moment we're trying to move back. Let's have a look, see what's going on. We've got a bit of volume there as well, back to the 200 in the 5-minute. We'll see, but the key here is this: it's the dollar, and if the dollar breaks the 62% retracement, we're likely to go up to here. Now the question is, can they do this for a third day? Because they've used this pathetic news from Powell in order to move the market up Wednesday night and all the way through Thursday. But there is some selling coming into the market, some selling pressure there. So what I will do is actually use the dollar chart as along with the silver chart to actually find the optimum point to get into this market. So I'll look at the daily, see what it's doing, and then work my way down in a 30-minute. So for example, what I would do to start off with, I've got that trade down at the bottom, but just in case, I will use a fib retracement like this just to see where there is some support, and also very importantly is the low from yesterday as well. So yeah, I'm sorry to have covered so much, but it's important stuff, and try and expose the personality of the metals market. With the metals market, it's just manipulated, pure and blatant manipulation. And for the reasons that the Fed don't want you to see, that it's all falling apart behind the scenes with the inflation, etc. And they just make for fantastic buying opportunities, and that's all I'm looking for, is to add. I couldn't care less. If you want to ramp it down, you feel free, JP Morgan, not a problem at all. So there we go. That's today's alert. Like I say, I'll be watching to see what happens. They may go for the ramp as we get the quadruple witching down to have a quick blast down to 25.50. Like I say, I've got the trade in place there, and if not, then I'll just bring it up accordingly to where I want to. But at the moment, I'm going to leave that be just below the 50, 45-ish area there. Okay, that will do it for this one. Like I say, apologies it's so long, but I just wanted to impart this information to you. It's Friday, the weekend's coming, have a great one, and I will see you on Monday. So as ever, thanks for watching, see you in the next one.